Hello investors. In this video, we are going to discuss about a very unique tool that will help you in filtering the stocks. Now, when you think about filtering stocks, what comes into your mind? A stock screener, right? You can create a bunch of rules in stock screener, and then based on that, a list of stocks will get filtered and you will be able to look at them. But there are a few problems with stock screeners. The first one is being the problem of edge cases. Now, what do I mean by that? Let's take an example. So you are creating a very simple screener of the two rules of ROE greater than 50 and PE ratio of less than 20. Now imagine a stock whose ROE is 14.95 and PE ratio of 19. Then this stock won't get filtered just because it doesn't fulfill our first requirement of ROE being greater than 15. But the difference is very, very less. And this stock can be a multi-bagger in the future. Like it can generate 2x, 3x return because it is almost fulfilling our criteria, but not exactly fulfilling our criteria. So this is called the issue of edge case. And the second issue in the screener is you cannot define the weightage of each of your condition. So for example, you want to give 70% weightage to the ROE of the stocks and only 30% weighted to the PE. Can you do that? No. But all this can be done in factor model. And just by the way, this type of screening tool is only available on Sharply. No other player in this Indian equity market offer this kind of tool. So to open a factor model, simply go to factor model and then click on stock factor model. And you will be asked to first select the universe. So how factor model basically work is you will select universe, you will select the number of stocks, and then you will select the sectors. So our universe can be Nifty 500, can be Nifty 50, anything. So I'll keep Nifty 500 as my universe as of now. Now, based on the factors that I provide using this add factor, an aggregate score will be generated based on the factor as well as the weightages. And this score will be generated for all the universe, but you won't be investing in all 500 stocks, right? So you will be defining number of stocks in the second step. So let's say I will be using this model to invest in 10 stocks. So number of stocks will be 10. Do I want to exclude stocks in this ASM, GSM, ESM framework? No. Now I'll be adding factors. Now maximum of five metrics can be added. So I'll click on add factor. Now let's create the similar factor model that we were discussing. So one metric being ROE, another metric being PE ratio, another metric can be sales CAGR, so sales CAGR. Another metric can be ROCE, uh, trailing 12 months. So I'm using this four factors, and now as of now, as you can see, all four metrics have equal weightages, right? You can also change this. The only condition is the sum of all four should be 100, which is pretty given, right? So let's say I am more concerned about quality of the stocks than the valuation of the stocks. So first of all, here we have the direction. So ROE higher the better, P ratio lower the better. So by default, we are providing this. If you want to change, you can change. If you are looking for IP stocks, you can change this to higher the better. But by default, we provide this. Now you can also control the weightage. So I am more concerned about quality. So I will give more weightage to ROE and ROC, right? So I'll give 30% weighted to both of them. So 30 here and 30 here. I am equally concerned about the growth as well as the valuation. So 60 is already done. I'll reduce this to 20. I'll also reduce this to 20. Right. And you can also decide on what universe this ROE is calculated. So all stocks of Nifty 500, or you just want to create scores based on all stocks in the industry or industry group. I'll keep it as all stocks in sector. Sorry, all stocks in universe. And I'm keeping uniformity in all four of them. So now I am giving more weightage to ROE and ROC, and I am giving less but equal weightage to sales CAGR and P ratio. Now, based on this model that I have created, I'll click on run model. It will generate an aggregate score for all 500 stocks based on this weightages as well as this metric value. So PE ratio has 20% weightage, so PE into zero point 0.2, sales CAGR into zero point 0.2, ROC into zero point 0.3. Based on that, an aggregate score will be generated. And based on that score, top 10 stocks will be selected because we have given 10 as our number, right? So top 10 stocks will be visible. So I'll click on run model. And as you can see, these are the 10 stocks based on the factor model that I have created. And here is the aggregated score. So this Chennai Petro has the highest score. So it is based on a percentile methodology. So it is a 100 percentile. Then Lloyd Metals is there, Jai Balaji is there, Angel One is there, Mahanagar Gas is there, right? And there are multiple columns that are available. Now, all four columns represent the selection criteria of mine. So, Chennai Petro is on the 92nd percentile when we sort all 500 Nifty 500 stocks based on the ROE trailing 12 months. On PE ratio, it is 99.6, so it has one of the cheapest valuation available and one of the lowest P. Right? So all four factor scores are also available here, and aggregate score is available here. And these are the list of 10 stocks. I can change this to 15, and then I can just, yeah, it automatically adjusts the now number of stocks are 15. I can change it to 20. It takes a few seconds, but now 20 stocks are visible, right? And now I want to check am I doing the right thing? Now I have given four factors, I have defined the weightages, but is this the right way to uh, filter the stocks? For that, I can simply backtest the model. So I click on backtest model and it will generate a backtest report for me based on the factor model that I have created. So, yeah, as you can see, our portfolio based on the factor model that we have created is performing well compared to the benchmark. And here you can see a complete backtest report showing performance charts, showing trade logs, showing methodology and performance. All important metrics are visible here. Then start and period, CAGR, volatility. You also have total number of trades. Now, this trades and everything is generated based on the backtest parameters. So what I can do is I can also change the backtest parameters as well. Right now, I am rebalancing this factor model quarterly. I'll do it monthly. And Nifty 50 TRI is my TRI. I can change it to Nifty 500. So I'll look for Nifty 500 and then I'll add this. So yeah, Nifty 500 TRI is here. So my benchmark is changed now. Maximum number of stocks is 20. I'm allocating equal weight as of now. I can also change that weight by metric, and my weighting methodology will be based on the return of the stocks. So 6 months return that I'm taking. So highest stocks with highest 6 months return will be given the highest weightage. Now I've changed all these parameters now. Then I'll simply click on rerun backtest. It will again rerun the backtest and it will again generate the report for the same. Okay, so as you can see now performance has even improved. Now we are at 115% 1 year return. In 3 years, the portfolio is doing better. There was a period where the index did better than the portfolio, but in the recent times, portfolios again started performing well, right? So you can now close this and save the factor model from here. Or what you can do is you can also paper trade. Now I've created a foolproof strategy using this factor model, right? So if I click here, It is generating the backtest report again, and now I'm fully satisfied with my strategy. I can paper trade my strategy from here as well. But as of now, I don't want to paper trade my strategy. I just want to save this factor model. So I'll click on save, and then I'm asked to provide the name. So model good quality stocks. So good quality stocks. Now, I can also provide the description that this factor model will uh, provide a list of stocks with good quality and reasonable valuation. And that's it. I'm satisfied. So I'll click on save, and my factor model is saved. So this is the factor model. Now, if I want to see my saved factor model, I'll again go to this factor model and then look at this my factor models. I'll click on it. And as you can see, model good quality stocks is saved here. Now I can click on it, I can update it, I can publish it as well. We will be allowing SEBI registered RA to publish their factor models as well. You can also delete the same. Now, one more functionality that we have is generating the factor map of this factor model. So if I click on this factor map, you can see we can generate three factor map: quality versus value, momentum versus value, and quality versus momentum. Now, in all these three factor maps, that 20 stocks we are filtering will be visible. So stocks like Mahanagar Gas and JK Paper are doing well on quality versus value. Now, if I look at quality versus momentum, then Jai Balaji Industries, Angel One, and BLS International are doing well. So I can analyze these 20 stocks based on these factor maps, and I can also export this list. So if I want to, let's say, analyze these stocks on my own, or I want to load these stocks in TradingView and analyze their chart. So I can simply export them on Excel and CSV file. So you can do all this using our factor model. So that's it. We hope that by watching this video, you will be able to use factor model efficiently, and you will be creating insightful filtering strategies using the factor model. Thank you.